We don't produce a 30-page report if we can do it in a 2-page report. And we don't produce a 2-page report if we can get the point across in a single chart. Digestible, conclusion-driven research is what we aim to produce. Commercial real estate investors are constantly bombarded with data and information. Most of the time, they probably feel like they're trying to drink from a fire hose. They get hundreds of emails a day. They try to read every news story and every analyst report. But at the end of the day, it's challenging and it's time-consuming to dig out the new news that will really impact investment performance. What Green Street does well is filter out the noise. Whether we're talking about operating fundamentals or asset values or big-picture macro events like oil prices and interest rates, our goal is to produce digestible research with the news that really matters. Green Street produces a large amount of proprietary data for our clients, but we're not a data provider per se. We are a provider of research and analytics that give our clients an informational advantage. As an example, we track cap rate data. We track cap rates for all the major markets, for all the major property types. Tracking that data is important, but our value add is really cleaning it and interpreting it. As any real estate professional knows, there's a lot of ways to quote a cap rate. You can quote it on trailing income or pro forma income. You can quote it before or after a capital reserve. We go through the painstaking process of cleaning those cap rate time series and standardizing the definitions. And getting those cap rates right is really important because they form the basis for the work we do on return expectations, and return expectations are the foundation for all the work we do on property sector and market selection. Green Street produces two distinct research product lines. We have a public market REIT research product, and we also have a private market product called Real Estate Analytics. But both products draw heavily off each other, and they should. If you think about public REITs, they're constantly competing with private vehicles. They're competing for capital, and they're competing for deals. Also, the public REITs are required by law to file financial statements, and those financial statements are really a treasure trove of data and information. Green Street has been covering the public space for almost 30 years, and that makes us uniquely positioned to gather and interpret that data. And that data is not just important for public securities investors who are looking to buy and sell REIT stocks. It's also important to private market investors because those public filings give them a window into public REIT operating results. It also gives them a window into operating strategies. Another reason private market investors should follow REIT stocks is pricing in the public market. If you look at public market pricing, it tends to be a very good predictor of private market pricing over time. That public market pricing, more than anything, also dictates how aggressive REITs are going to be in the acquisition tent. In the real estate space, the public and private markets are really attached at the hip, so any discussion of one without the other is incomplete. Our ability to speak both languages, the public market and the private market language, is hugely additive to our research and really sets us apart.